Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, November 17th. Okay, guys, let's get started. We've got some news breaking this morning, and actually last night as well. I'm sure you've heard that Tesla's been now included in the S&P 500. We'll talk about that a little bit this morning, look at some charts. Also, Amazon has announced that it's jumping headfirst into the pharmacy business. You'll remember 2 years ago they bought that company PillPack, which specializes in customized pharmacy prescription management. So this has been widely expected for quite some time, but of course whenever it's announced it's a surprise because you never know when they're going to roll it out. But this will offer Amazon Prime customers the ability to order all their medication online from Amazon, get it next day delivery. They're going to be able to take all the prescription payment methods and all that kind of stuff that a CVS or a Walgreens could offer. So those stocks are trading down quite a bit this morning. Also in the crosshairs may be the drug distributors, which would be McKesson, Cardinal Health, and AmerisourceBergen. So also Rite Aid would be another retail pharmacy that's in the crosshairs of this. So though there may be some nice trading ops in there for you active traders that like trading these catalysts, those stocks are on the move this morning. So Walmart also may be, Walmart has earnings this morning. They haven't been released yet as I start this video at 7:14 in the morning. They have a big pharmacy presence, so we'll wait to see if the Walmart news has any impact on Walmart. Obviously a much smaller part of the business than it would be for CVS or Walgreens, but you never know how these things might be affected. So let's jump in with SPY and we'll look at these charts. Yesterday we had the gap up on Moderna, chopped around for most of the day and finished near the highs. The gap that was left behind is here between 359.59 and 358.10. I think if there's any pullback to test the top of the gap that holds would be a good long entry. But here in the middle of the range, I don't think you have a trade. I think you have to wait till either 364 or the top of this gap at 359.59 to take a position. Obviously on any breakout to all-time highs above 364 would be a buy. Notice we've got a potential bull cross working here and a nice uptrend on RSI. So from a technical posture standpoint, this looks good. Now, I want to point out at this point that if this bull cross fails, what I mean by that is, goes up just a little bit and then rolls over right here at the top, that would be your double top with bearish divergence. Notice that the PPO would be at a lower level than at this prior high with price at the same spot. So be on the watch for that, especially if you see, price creep up to 364 and then stall or fail. That would be a nice place to initiate an objective low risk short, looking for a move back to 360 with a stop just above. Here you see it on the 30-minute chart, very much the same thing. Notice that here on this high, the position of RSI and PPO, now as we approach that high again, RSI and PPO are at lower levels, and that's your divergence. But remember, just divergence isn't a sell signal. You got to wait for price to confirm with a rejection here at 364 before you can really do anything with it. Moving on to the Qs, which are getting a lift due to the Tesla pop. It last time I looked was set to open right around this 294 level. I've dropped in a nice little trend line, I think, off the lows, capturing quite a few data points along the way. I think you can stay long above the trend line, but on a break below, and a break below 293, that would be your sell signal on the Qs. Here on the 30-minute chart, we see the same thing. I've dropped in a gentle rising channel, also dropped in a midpoint line that often acts as support and resistance. You can see here it popped above, walked along the top of the channel, came below, but then found resistance at the midpoint, found resistance at the midpoint, back to the bottom of the channel, and now trying to get back up above. So certainly we wouldn't want to see the Qs drop out of this channel. That would favor a move back to 290 and possibly down here to this 288 level. And the reason that may be a concern is because, let's think about it. So Tesla's going to be included in the new benchmark. We don't know how much pre-buying has already happened, because remember last quarter everybody thought that Tesla was going to be put in the S&P 500. There had been a run-up, and then they weren't included. So we don't know how many of those people still held on to their shares or have subsequently sold them, or how much buying is yet to be done in Tesla in order for those hedge funds and indexes to rebalance their holdings now that SPY's been included, or excuse me, now that Tesla's been included in SPY. So if funds decide to use the FANG names, Facebook, Apple, Amazon, Microsoft, Google, and Netflix, as a source of the monies that they're going to allocate to Tesla, then there'll be some selling pressure on the big FANG names. And if there's selling pressure, they have such a heavy weighting in Qs that you may see, a break of this channel. So there may be some reasons for that linked to Tesla. So watch this 293 level, watch your midpoint line of the channel, and then of course watch your channel low for support. IWM had the big gap up yesterday and closed right on the highs. I have that high yesterday at 177.63. If we were to break that today, that would be a great place to either roll up your strikes and your stops, move your stop to just below this level, and then stay long against the high. A move lower to test the bottom of the gap at 175.40 right here would be another potential place to initiate a long. And if that doesn't hold, then the bottom of this layer here between 173.50 and 173 looks like a good place to try a long. The bulls are still in control. There's no reason to think these levels will fail. So I think the benefit of the doubt is with the bulls. And then if you're stopped out, you're stopped out. What would change my mind is if price fell below 173 back into this trading range. Then I would favor a move to 170. And then, of course, if 170 were to break all the way back down here to fill a gap to 164. But those are low probability scenarios at this juncture. I still think the cyclical value trade has gas left in the tank. So I would be a motivated buyer on dips to well-defined levels. And here on the 30-minute, you see the same thing. You've got your gap here. Got a little gap down here below from last week's action. And then your larger gap down here. Now, let's run through FANG real quick. Pretty docile yesterday. Facebook trading in a range between 275 and this 280. I think in order to get a more impulsive move, there's going to need to be a breakout above 280 in this trend line for an open door to 285 and potentially higher. If it were to break 275, then I would favor 265. Of course, you're welcome to trade this $5 range as you see fit, but there may be, a lot of oscillation here while price is deciding whether to go higher or lower. So you can trade that as you wish. Apple got the nice breakout yesterday above 120 that we talked about, and if you got long, I think you can stay long against 120. But if 120 fails, I think it's coming back to 118. So we'll see how that goes today with the Tesla rebalancing underway. How much selling may come into Apple. And on to the Tesla charts. I think it sets up real well for trading. When I looked pre-market, price was around 460. So given that price closed last night at about 409, it's going to open with a $50 gap below. We've got a prior high at 466, and we've got an all-time high at 502.50. So here's how I would think about that. I think there's going to be, in general, buying pressure for the days and weeks ahead as this rebalancing takes place. If price can clear 466, I think that would be a good place to get long and look for 502. If you see price get up to 466 but just not be able to get through it, you can try a tactical short there. I mean, it is objective to try that. Just because it's objective doesn't mean it's going to work. I would probably put that idea on the back burner. Of course, you're welcome to do what you like. I'd like to see a few days, a week pan out just to see how the price action behaves up at these levels, and just see how much accumulation still has to be done in order to get to a steady state level on Tesla. Here it is on the 60-minute chart. As I mentioned, price will be up here around 460. If you get above 466, I think you can take a long there and look for 502. Obviously, this isn't the scale here. It's off the scale. So once that recalibrates, I'll be able to switch that this morning and put it all in balance. Microsoft, a whole bunch of nothing yesterday. This 217 seems to be capping the advances. I think as long as it stays below this 218, I would favor the downside. On any break above 218, I would take it long and look for 221.50 and then possibly 225. Amazon, oscillation, nothing really going on. It's toggling between 3100 and 3150. I think 3150 is your pivot for higher. If it can clear that level, get long with a stop just below and look for 3200 and then possibly 3250. If it were to lose 3100, I think it's going to come back to this 3050. These levels have been working great. Google made a first of all, I changed the upper boundary on this trading level. I had it at 1780. There's been a number of candles that have gone up to 1795, both back here and here, where price was turned back. So I've expanded the box to 1795. I think anything above that level is a long, and anything below that level favors a move back down towards the bottom of the box. But recently, Google's been the strongest ever since the big gap up on earnings. It's just been consolidating in this area, and I think while this trading range is certainly wide enough to trade, a more substantial directional move will happen on either a breakout or a breakdown from this range. And notice momentum coming out. We had momentum peak and RSI peak right in here. The equivalent high was at lower RSI and lower PPO, and now just yesterday we're back at the same level on price, but much lower momentum. So momentum is coming out, and it remains to be seen whether price rolls over and heads down towards the bottom of the box or not. But there is quite a bit of bearish divergence here setting up on the Google 60-minute. So what really needs to happen is a breakout and then come back up and burn through those divergences for the bull case to really take off. Netflix, nothing. Just oscillating on this 480 pivot point. I would continue to use that level above targets 487.50 and then 494, and as long as it's below, I think the door to 465 is open. Now I want to before I go on to some of the spider sectors, I want to throw out something to you guys. Over the last 6 months, the FANG names have been very good to us on an intraday active trading level. Almost every day for a long time, there's at least been 1, 2, or 3 of these names that offered really nice risk reward trading ops intraday. That may be changing. We can tell that these FANG names have gotten soggy, not really doing a lot. And what I want to caution you on is trying to force something to happen that isn't there. For instance, if you're used to trading one contract of Netflix, and you're used to getting, $10, $15 moves on a daily basis, whether it's, up 10 and then down 5, or, really getting some intraday travel, and then all of a sudden it goes soggy and it's only moving $5. What some traders will do to try and compensate for that is jack up their contracts. So instead of trading 1, they trade 5, because they're only seeing 1/5 the travel during the day. So they're trying to make the same amount of money on a stock that's just not moving a lot. I would really discourage you from going that route. First of all, you've quintupled your risk. If you go from 1 contract to 5, or whatever the number is, you've doubled, tripled, quadrupled your risk, and you're trying to squeeze juice out of a lemon that's already been squeezed dry. So you will lose on slippage, for one, the bid-ask spread. You're not going to get that easy fill where it doesn't matter, where the bid-ask spread doesn't matter because the price is moving so fast, it becomes not that big a deal. But when you're buying multiple contracts and you're paying the ask and you're selling on the bid, it can really add up and eat into your profits. So really, you should do one of two things. One, just step aside and wait for these stocks to perk up. Or 2, look for other stocks that are moving. Maybe it's a semiconductor name like a Micron, or an AMD, something like that, or a Nvidia, something like that. I don't have a list of names on the top of my head, but if you're looking for a new name, that's fine. Watch it. Get comfortable with it. Fine-tune your levels before you go diving in, because each stock has its own characteristics, and you don't want to just assume right out of the gate that you're going to be dialed into however that new instrument moves. So I just want to throw out those cautionary ideas to you, so you don't get wrapped up in where you're taking these daily paper cuts that add up to real money at the end of the day when you're trying to trade a stock that just isn't moving. It's not productive. I've been there. It sucks. Just step aside, either find something else to trade, or wait for these to perk up. And they will perk up. It's just a matter of time. Okay, I wanted to go through several of the spider ETFs that are moving towards action points. XLC coming up to a prior high here at 65. On a breakout, you can get long. On a rejection, you can be short. We do have some bearish divergences going on. Could get a double top setup right here. So mark 65 in your system for an actionable level. Had a big gap up on energy yesterday. If you got a pullback to 35, I think you can buy that with a stop just below, and then look for a continued advance up to the 200 at 37 and possibly up to 38.50. I think there's some good tailwinds in energy, and we've talked about that. If you're not a an index kind of guy, you're welcome to go look at, refiners, E&P names, etc., for individual names that are acting much better lately in the energy complex. Financials. We had marked out this little bracket trade between 26.75 and 27.50. We got a breakout yesterday. I think you can be long here against 27.50 and look for higher ground on the XLF financials. Another one to look at is KRE. That's the regional banking index. I don't have that chart handy, but it too has been performing well over the last week on this value cyclical rotation. XLK technology, we've got a resistance level here at 124.50. We've got price coming back into that level again. We do have potential bearish divergences. Watch how price behaves around this 124.50 area. If you get a breakout, you've got about $2 before you come up to this prior high. It might be worth a trade there, or these could be potential rejection points on the XLK. XLY, right back up here to this prior high at 155.50. We did have this peak that they faded back here at about 158. I think if you get a breakout here, you can take that long and see if it can punch through this level here at around 158. Notice the decline in momentum and in RSI. So those are yellow flags and potentially giving us a heads up that either a breakout may fail or that a breakout may never even materialize in the first place. And remember, XLY is 25% Amazon. So, in a lot of respects, if Amazon starts moving higher, this is going to break out. If it doesn't, it may be tough for, this sector to move forward because it's such a cap-weighted thing towards Amazon. Okay, that's where we're at heading into the morning. I hope you found the information useful. If you did, please hit the subscribe button and the alarm bell so you get all my content. You won't miss a thing. Also, over in the show notes, you'll find links to register for all my content, and you'll get midday updates and all kind of things. Whenever I send something out, you'll get a nice email so you won't miss a beat. There's also a link to the blog site where you'll see a lot of interesting and helpful articles for aspiring traders at all levels. So let's see how Tesla rolls out today. Let's see how mega cap tech handles a potential rebalance with Tesla, and let's see how SPY and IWM behave, and see if the cyclical trades continue to remain strong. Don't forget the Amazon Pharma, where the drug retailers, CVS, Walgreens, and Rite Aid are getting hit. There may be some intraday trading ops there for you. And also the drug distributors, McKesson, AmerisourceBergen, and Cardinal may also be affected today. And I don't know if I mentioned it, but Jack Dorsey of Twitter and Square and Mark Zuckerberg of Facebook will be back on the Hill today discussing privacy issues with lawmakers. So we'll see if any bombshells come out of that testimony today. Okay, let's wrap it up here. I really appreciate your time listening in. Hope you have a good start to your trading day today, and I will be in touch later this morning and into the early afternoon. Thanks again. This has been Chris Buss with Traders Profit Compass. Talk to you next time.